Hey guys, it's TWT today with another video, and today we're going to be starting off the new series. I'm not entirely sure how long we'll be doing this series for, maybe 10 episodes, maybe even 15 episodes. It just depends on how I plan to space out everything in these videos. So what is going to be this mentorship or sort of program that I'm going to be doing? This is going to be an unscripted, unedited, completely raw information about learning the markets, okay? This is literally going to be so easy to understand that anyone from any experience can literally get into these videos and learn it. I know how it feels to be a student. I know how it feels to go into these charts wanting to make money and having completely no idea what is going on. And so I'm going to break the charts down to be super easy to understand, okay? And I'm going to break it down line by line throughout this series, so that at the end of this series, this is going to be completely for free, by the way, and I'm going to teach this to everyone so that you can go into these charts and have a complete understanding of what's going on. It doesn't matter if you have a degree in finance, math, English, history. It doesn't even matter if you went to school. It doesn't even matter if you dropped out of school. But obviously, from my perspective, like if you didn't do your GCSEs or if you didn't do your SATs or whatever in America, I don't know how it works there, but you don't need any of that because I'm going to teach you everything from scratch, okay? So before we get into anything, before I even explain to you anything that's got to do with the markets, I'm going to let you know a little bit more about my background, okay? So I've been learning from actual traders in Canary Wharf. If you don't know what Canary Wharf is, like the equivalent of like New York traders, you know, the high-end, high market, fast-paced, super liquid, super like intense. If you ever watch The Wolf of Wall Street, literally like that. It's not as intense and it's not as cool, but I've been in that environment. And I've worked with very high intense traders from massive disciplines. I'm talking from University of Cambridge, Oxford, LSE, KCL. Again, these are huge London universities. And also students that went to Harvard, also went to Pennsylvania University. So I'm talking massive, well-educated individuals who have taught me. And that doesn't mean that people who are watching the video need to have that kind of experience. It doesn't mean that you have to have that kind of knowledge. But it does mean that I'm going to help and teach you the fundamentals so you can trade on the same level as them guys, okay? And the reason why I'm able to do this is because I've done so much experience, I've got so much research and so much knowledge that I'm going to show you guys how you can do this exact same thing. This is going to be what I'm going to call this program called Seeking Liquidity. Because what trading really is you're trying to find liquidity, and this is going to be something that I'm going to tap back into at the end of this video, so just tune in guys for that, which will be really cool. But yeah, let's begin. So I've studied, I've read over 100 books, and I've also got a master's in finance. I don't unfortunately have a PhD, but I don't really want one, and I don't really want to pursue one, but I think it's going to be really cool to have all that kind of education, because I've learned from some of the best individuals from Russell Group universities. So you guys can tell, if you don't know what Russell Group University is, if you're from like America or international, they're like the top echelon kind of Ivy League universities, which means I've got very high education. And everything I say, I don't take anything with a grain of salt. Nothing's like, think of it yourself or do what you need to do, whatever. It's literally tried and tested methods that work, okay? Now, at the end of the day, this is not financial advice. I'm not telling you what to buy or sell. I'm not telling you how you should go about with anything, but I'm also going to tell you the framework, the ability to go into the charts and do this, okay? This isn't a grain of salt where it's like you have to kind of like pick and choose what I'm telling you. I'm literally telling you how to do it, but I can't breastfeed you everything that it is. I can't give you the salt. I can't give you the spoon and make you do it yourself. Like, you have to physically do it as well. Like, you won't make money that easily. But I'm going to teach you it so that it literally doesn't take more than 5 minutes of your day to go into the charts, see what you're looking for, execute, and make a decent bag. And when I mean a decent bag, I don't mean £10, £20. I'm talking hundreds to 200s to 300s of pounds, dollars, yen, whatever. So let's go straight into this. Let's go into the real basics, right? What is trading, right? Realistically, what is trading, right? So to dummy down what I've wrote, and this is like completely what I've wrote. So It just means finding a market inefficiency and then taking a profit from that. But what is really an inefficiency? You know, when we think stocks, when we think investing, when we think trying to do any of this stuff, right? What does that even mean? What does it mean actually going into the charts, or what does it mean going and buying something and selling it to make profit? Like, that makes no sense. Well, think of it like this, right? If we were to go into the shops and buy, let's say we were going to go to the shops and we were going to buy a book, right? And we were going to the shops, let's say every single day, the book's worth £10 or $10. And we go the next day and it's now £11 or $11, right? And we were like, shoot, I could have wished I bought that book and I could have saved $1. Now, look at it from that perspective of like, we could have bought that book and saved £1 or $1. But then look at it from the perspective of someone who's thinking as a business idea. Well, this book's increasing in value. I could buy the book when it was cheaper, like £10, $10, and sell it for £11 or $11, and I can make $1 profit. What is $1? But then scale that. Well, let's say we bought 1,000 books and we bought it for £10, sold it for £11. That's £1,000 profit if we had 1,000 books per se. Scale that even bigger. We bought 10,000 books, sold it for $11. That's $10,000 in profit. Again, scale it even bigger. And that's exactly what trading is. We're looking at the differences between a price between different assets or different things. Not necessarily books, but it could be gold. It could be different currencies. And that's kind of where we're going to go into the next bit. What is FX trading? What is arbitrage profit? Now, arbitrage is a term that is used a lot in books. It's used a lot in my studies, for example, where I've learned financial derivatives, quantitative finance, which are just realistically buzzwords of what actually happens in the markets. And if you really, really want to go into the real depths of that, I can go into really teach you the fundamentals of derivative trading. And that requires a lot of algebraic mathematics that can really break it down. But I know that's going to be really scary for a lot of you viewers, so we're not doing that. We're going to show you just the dummied down versions of everything. And as much as this may be humiliating for some, I was in the same position as you. I was literally in the same position. I may have had loads of education, but I still learned a lot of things from the external sources and put it and compiled it into a sort of set format that you guys are going to get today. So how can we do this into trading now? Well, think of it like this, right? The value of gold increases all the time. And again, gold is like a commodity. I feel like this is kind of like general kind of knowledge. Like, you know that you can go in and buy gold and maybe 10 years from now it's going to be £3,000, right? Trading is like that, where you're looking at gold against the US dollar, right? You're kind of seeing with the price of the gold, which is like now $3,000 or whatever. And you're thinking, well, if we buy gold when it's cheaper and then we can sell it later on, we can make a profit. And that's exactly what people are doing. Except trading now is, instead of it waiting 10 days, 20 days, 30 days, it's more of like, we'll do it today, buy it today, sell it today, make a shit ton of money. Because we're not only buying it today and selling it today, we're doing it at such a huge scale. We're doing it with not one brick of gold, we're doing it with 10,000 bricks of gold. It's the same concept of the books. It was like, we sell 10,000 books, you make £10,000 profit if it increased to $11. It's the same concept with gold. If gold increased from £2,500 to £2,600, that £100 difference doesn't sound like a lot, but then if you own 10 bricks of gold, you're going to be making a lot of money. But then you're also going to ask me, well, how can I have 10,000 bricks of gold? If I had 10,000 bricks of gold, I'll be a millionaire. But that's kind of where we get into the idea of leverage. Now, I haven't put leverage as a prop on the screen, but I kind of went onto a tangent. But leverage is basically being able to use the accessible information that we have on the internet, where people are willingly going to let us trade and basically trade with so much leverage that we could literally be spending £100 and use that £100 to buy 10 bricks of gold, just purely to trade with it, right? We can't keep the 10,000 bricks of gold, unfortunately. If that was the case, we'd be millionaires. But we can use that to make our money. And if we fail, well, then the broker's going to win. But that's for a story for another day, okay? Now, let's go into the real fine line basics. I know you guys are edging on your seat right now. You're probably tossing off, waiting for me to get to the big stuff, right? What is a candle, right? I'm going to say candle a lot in these videos. I'm going to say, well, look at this candle, look at this wick, right? So I put wick and candle right next to each other, okay? So what is a candle? Candles are going to literally look like a box, right? It's going to be a box, right? And you're going to see candles a lot. And I'm going to show you on the charts probably in the next video the breakdown of the candle. But for now, we're just going to look at candles as it's literally a box. And a wick is the line. Now, the line could be here at the top. This is going to be where price has literally done this, right? Price has come up like so, and then it's come down, maybe gone up again, come down, closed out, and then ended there, right? Which means it's come up, it's made a high, it's made this move, so it's come up, then it's gone down, and then closed here, right? I'm going to annotate this to make this a bit easier. So this was the highest point of the move, where the price ended, where the price started. Okay? And so you're going to see a lot of candles like that, okay? Where it's going to look like something like that, right? It's going to come down here, probably started down here somewhere, started here, came up right to the top like so. So it was like this, came up, came down, you know, maybe we'll make it even more simple. Literally came up, came down, stopped here. Came up, started from here, came up, stopped. That was the highest point, came down and stopped there, right? And this is where it ended, right? Now this is kind of in a bullish scenario. And what I'm trying to say is in a very simplistic ways, you will see that price will make moves, but the wick is basically the area where the move happened, but it didn't finish off. It went into that region, went to a certain point, and then ended there. And so we didn't actually see the entire move, but it did the move. And it's going to be very important when we go into further segments, but that's going to be for another video probably, because it's a lot to take in. But just think of it as literally like a move that's gone up and then gone down and stopped at the center, like around here, right? And that's why we have these candles, why we have these lines. It's the movement, but not the entire move. And the candle is the body of it. This is the body of the actual candle, right? And this is what price actually did. This is what price actually has shown us, right? And I'm going to make a reference to something that was referenced from someone called ICT, the Inner Circle Trader, who is a huge trader in the trading space. And he says that candles tell the story, but the wick does the damage. Okay? I can't type. The candles tell the story, but the wick does the damage. So just remember that, okay? This is a lot to take in, so I kind of want you guys to kind of take a screenshot of this, kind of keep it in your notes. If you are making notes, I really hope you are making notes, because this takes a long time for me to make these kind of videos. So I hope you are making notes, and if it doesn't make any sense, please, please, please comment on the video, and I will literally go back and revisit this and make this super simple to understand. And I'm also planning to make like a PDF or some sort of document where it's going to make this even more simple, okay? And you can kind of use it as like a follow along handoff. Similar to if you went to like university, but this is completely for free, okay? And so that is the very simple idea of what a candle is, okay? So now, what is bull and bear? Now, bull and bear is something I'm going to also reference quite a lot, okay? Let me just move this down so we don't show you too much of the next segment. Bull and bear is basically, bull is the idea that the price will move upwards and it tends to be a green candle, and bear tends to be the down movement where price is going down. You always hear people saying, oh no, you guys are bearish, you guys are bullish. Bullish, think of it, a bull running high up and a bear being angry and aggressive but running downwards. And so think of it like that. And it tends to be a red candle, and I like to use black candles for the red candle just because it's visually a little bit easier to kind of comprehend. But yeah, that is also a huge thing. Now, what is a bull candle? A bull candle is going to look like a little bit like this. It's going to start from here, come up, and then make its high move, come down, stop there. Price is going to start from here at the top, run down, make a really low point, and then come back up and end there. So the bull candle is going to be going upwards, it's going to be going this way, whilst the bear is going to be going downwards, okay? Pretty simple stuff. So now let's go into this then. What is a bull run? A bull run is basically the idea that price is going to come up, maybe come down a little bit, come up, but it's initially and basically constantly still going up. Despite these little moves in between, it's going to be constantly going up, right? And that is what a bull run is. And equivalently, the bear run is the exact same but the opposite, where price is going to come from a high and keep running lower and lower and lower. So whenever you hear people say we're in a bull run, it means that things are going higher. We're making a lot of these bull candles that are green. And when we see a lot of bear candles in a bear run, they tend to be red candles. Okay? Pretty simple stuff. Now, we need to go into something a little bit deeper into this now. That's pretty simple stuff that we kind of explained. Well, why is this important to know these fundamentals? It's because they all share a story. Without a story, you won't be able to learn to make any money. And this is all algorithmic. We're trying to seek liquidity. But what really is liquidity? Well, let's go back to this example of what is a bull run and a bear run. Well, liquidity is basically the idea that price is constantly moving, and when we're seeking liquidity, we want to target the areas where there's a lot of movement. And so you don't want to be following along a market that's doing a bunch of this and this and this and this and this, because that to me means nothing, right? We can't really make money from movements like that. We don't want to make a movement and we're going to be like, well, where's price even wanting to go? Because it just keeps going up and down, up and down, up and down, up and down. And it's very stale. And this is what is also used as the term consolidation, right? And so what can consolidation really mean? Well, it just means that price isn't making any moves. It's not doing a bull run. It's not doing a bear run. It's just staying straight, okay? So ideally, we want a bull run because we want to start from here and we want to seek the liquidity at the top. We want to target the top. We want to get to the top. We want to make money at the top. Let's say the price of the box here was £10, right? We know because we want to seek the liquidity, there's buyers, there's people that are willing to buy it for £11, which means we can buy here, bull run to the top, sell it for £11, and boom. 10,000 bucks, $10,000. Same exact equivalent, right? It went from £11. We know people don't want it. There's a lot of liquidity and people are wanting to sell it. So we're at £11. We buy it at £11. We sell it at £11, and we buy it at 11. We sell it at £11, and we sell it to those that want it for £10. Okay, and so you're making money off that. Okay, because you're selling it. You're making the money. Okay. That is literally what liquidity is. You're finding the buyers and the sellers. You're making money from people that are willing to buy at £10. You're selling it at £11. You're making a profit. The same way how you buy at 10, you sell for 11. Same thing. Okay? A lot to take in. I'm going to be honest, there's a lot to take in. Especially for my first video. Whenever I used to watch videos or study, I used to be like, that is a lot to take in. So just definitely go slowly, guys. Definitely rewatch the video if you need to. And I think this is where we're going to wrap it up for today. Just some really simple, fundamental basics. And if you guys want these videos to continue, then please, please, please like and subscribe for more videos and join the Telegram, okay? So I've made a Telegram and I'm aiming for around 100 followers by the end of this month. So I want to get to 100 followers because at the end of the 100 followers, right, I'm going to plan to give out some really cool stuff, right? I'm going to be giving out free signals to experienced traders. So after you watch this bootcamp, after you watch all the videos I'm going to release step by step on how to make money, I'm also going to show you step by step how I do it every single day on the charts and how I make money. And you can basically kind of copy similar things that I do, but you need to watch the fundamentals first, because without the fundamentals you can't make any money off it, because you won't understand it and you're not going to be able to do the same thing I'm going to be doing if you don't learn everything. And I'm also going to be giving some more market analysis, so if you guys who are experienced traders already know how to trade, you guys can definitely then look into my market analysis, see where I'm going, what kind of directions I'm going into, and you can make some money off that. That's where I'm going to wrap up the video. I hope you like and subscribe, guys. Again, as I said, join the Telegram. We're aiming for 100 followers. And yeah, good luck on your studies. Please rewatch the video if you need to. And peace.